Let's get to the elephant in the room. On paper, this makes sense, but you know there's more than a few people, given the tensions with China and the United States right now, who are wondering if this plant is going to fly or if it'll face resistance in Washington.
Hi, Phil, and thanks for the opportunity. Look, this plant is a wholly owned subsidiary of Ford. We run the plant, and it's our investment. So, you know, that's as simple as it needs to be. And based on that, you know, whether it's CFIUS review, whatever, based on our investment in our wholly owned subsidiary, we don't expect any issues.
You'll be licensing the technology from CATL. Any concerns that maybe down the road China has a change of heart about its companies licensing their technology or restricting their technology, even if it's you're under contract to use it here in the U.S.?
Yeah, I mean, there's always risk in business, but we feel really comfortable. You know, CATL is the largest battery manufacturer in the world, and they have a lot of experience with U.S. companies around the world. So they're in all of our daily consumer products. So I don't expect any surprises based on their reputation, scale, and experience.
Jim, this is for a plant that will be building lithium iron phosphate batteries, which are about 15%, roughly speaking, lower price than the current batteries that you are using in your electric vehicles. How much will that be allow you to drive down the cost of production overall and, in theory, make it more easier to build lower price EVs down the road?
This is a really big deal, Phil. You know, we're scaling up to 600,000 units by the end of this year, and these batteries are less expensive, as you said, for the consumer. They're also better business for us, and they'll help us get to that 8% roadmap for profitable EVs. You know, scaling EVs is great, but you have to make money on them. And the LFP technology is great for customers. It has, you know, about roughly twice the fast charge cycle capability, but it's also great for commercial customers, and it's really affordable. And we're going to be importing this spring, so we're going to be able to offer those benefits to the customers now.
Mr. Farley, it's Kelly here back in studio. Thanks again for joining us. Since this announcement last hour, the number one question we're getting is people asking why partner with a Chinese company. Was there not a U.S. alternative or a Panasonic available who could help you achieve these same goals?
No, I mean, again, this plant is run and owned by Ford. It's a wholly owned subsidiary of Ford, and it'll be run by our own people. So we don't really have any concerns at all. We're the number one employer in the U.S., and the technology is very ubiquitous. You know, so I don't see there's any issue because it's a Ford plant.
Understood. Was there a U.S. Option on the table, though? Because my question also goes to our supply chain. If the whole point of this act by Congress was to basically create and bolster the American supply chain for making these cars, was there not a viable alternative?
No, there wasn't. LFP technology is very well developed. It's a global. The battery business is a global business. And there were no alternatives, especially at this scale. I mean, these are 20, 30 gigawatt hours. It's a huge operation, and this is the only option. The IRA was intended to onshore projects just like this. If we didn't have the IRA, we wouldn't be having this conversation. It'd be a very different conversation. The economics dramatically changed for Ford, and that's why we're announcing this today in the U.S. and in Michigan, because of the IRA.
Jim, speaking of the IRA and the EV tax credits, the way this partnership is set up right now and the manufacturing at this facility, currently half of the EV tax credit, about $3,750, would not be eligible for the batteries coming out of this plant, in part because of sourcing of foreign materials. Do you think that changes by 26? How confident are you that you'll be able to get that full $3,750 tax credit if that's the amount that's being offered at that time?
Well, Phil, we're the only manufacturer who's going to bring NCM and LFP to consumers in the U.S. and build them here in the U.S. And because of that, we get the $7,500, the manufacturer gets a $7,500 tax credit. On the consumer side, as you said, you know, the customer will get a benefit. You got to remember, LFP is a technology that's almost perfectly fit for commercial customers. And Ford is 50% of that market, even larger in EVs. So for those customers, they will get $7,500 irregardless of where the batteries are made or what raw materials. On the retail side, which is a smaller LFP audience, you know, they will qualify, whether it be 3570, 3750 or 7500. We don't know yet. We're working on that. We really want to bring all the raw materials and all the processing here to the U.S., but that takes time. The good news is for commercial, they'll all get the $7,500. For retail, they'll qualify. It's just a matter of how much.